Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, November 19th. Well, market's getting off to a real bad start Friday morning. Ended up reversing course around 11:15 and pretty much taking back all of its losses on Friday to actually close positive on the day. U.S. dollar up very small. Nice, what you want to see if you're a bull. NASDAQ up 17, S&P up 6.5. Gold finally bounced up $1.90. The Dow Jones up 45 when the Dow was actually down somewhere below 45 to 60 points. And that really came on congressional leaders right around 11:30, talking about how they made some encouraging comments about their negotiations and how that they would work through the Thanksgiving week and have some sort of resolution before Christmas. And that actually put a bit into the markets, and the markets have rallied. And that's really what the market needs, right? Markets that do not like uncertainty, and that's what we've been having right after Election Day. And we've been selling off not as fast as I'd like. I would have loved to see a capitulatory sell-off, but we do not have to get that. I always say that, keep in mind. But it would have been nice to see one more push low, which I thought we were getting on Friday. But nonetheless, our government came out and said that we will get a resolution before that. Despite that, still an ugly week. Major indices, if you look at all the performance, across the board between 1.5 down to 1.5 to 2%. So really ugly looking week last week. Anyway. Our attention's still building in the Middle East, so you want to maybe watch oil this week and see where that goes. But it's totally driven on what's happening out in the Middle East. So, just a word of caution if you are trading it. Talking about real briefly about the S&P, we talked about 1345, 1350 being a major area of support. And if that was breached, we would be looking to test the July lows. Now that we are above it, we do have bullish reversal candles across the indices, which I'll show you. And this is something that we're going to be watching. Friday's low is going to be coming into importance here. So we're going to need to see Friday's low hold, and a break above 1425-ish will start giving us positive momentum to the upside and say we might have a clear trend reversal. So 1425 will be a big area. Now, obviously, we're away from that, but that's something to look on in the coming days. So that's something that I'm going to be watching as well. So those are just some levels, but we definitely want to see Friday's low hold in the S&P. Now, we also saw a big push in Apple, right? We had 1422 being a target of our first buy-in, 522, apologize, 518 being having to really hold. Otherwise, we'd see close to 500. And sure enough, we ended up down as low as 504 before the big bounce happened. And we actually, Apple was actually down about 20 before rebounding. So that's actually going to play a big positive role as well. So keep that in mind. Now, we are coming into some seasonal tendencies, some strength here. And that's something that we want to keep an eye on because the markets right now really need this bounce. And if the Santa Claus rally is going to take shape, it's going to happen probably start of this week. And usually when you have a shortened holiday week, you usually get some sort of reversal. And that reversal could pan out into a Santa Claus rally going into the following week. So this is something that we're going to keep an eye on. Now, obviously, the Santa Claus rally is always expected. It doesn't always have to happen. But we do have some strength in, obviously, technology because everybody's looking to buy big screen TVs, Apple iPads, iPhones, what have you. That actually will and help Apple catch a bid here. And if that's the case, then my upside target with Apple would be somewhere around 600-ish, and then look to reevaluate and see if this if Apple sellers really come back out there. And if they don't, then obviously we could start looking at a possible area of resistance, maybe testing the highs. All right, so let's go into the charts. Let's go into our segment here. As you can see, the sector is pretty bad. And if we look at the indices, Dow Jones 1.7%, NASDAQ down 1.78%, S&P mid-cap 1.54%, Russell down, good gauge of risk. And the dollar here, very surprising, as you know, the dollar, Russell, this is the Russell, apologize, down 2.3%. Now, this is big here. The Russell here is showing you risk, is a risk-off sentiment is pretty big. However, now I want to show you the chart. the IWMs, since the IWMs have been really battered hard and risk comes on, that might be the go-to sector to look to play long in the coming days and weeks. Anyway, as you can see here, oil down 0.9%. But anyway, this is something to watch here because with the Middle East. Okay, now I want to show you some of the our indicators, and we look at our trusty NYMO. NYMO has basically produced a buy signal into the markets. All right, so we're in the deep oversold territory, down 87%, and this area here really shows us where we usually get a decent bounce. And as you can see here, this is a big area, and we broke below the Bollinger Band, standard deviation Bollinger Band, and we actually broke back, closed back in it. So this here produced a buy signal to the markets. Okay, now take a look at New York Stock Exchange, new high, new lows. These areas where they spike up here, new lows, actually produce buy signals. And if you look at my other previous chart here, so we have another buy signal come in, and that's the new highs, new lows. Want to take a look at the S&P 50-day stocks above the 50-day moving average. We're in the territory that produced new bounces, sort of bounces, at 23% here. And this is another good area. Another one is the S&P 200-day moving average. SPX 200 has produced some decent buy signals. So we're in this area where we are in a mix of a bounce. Now, that's the thing, is the bounce, right? We don't know exactly, is it just a bounce, a dead cat bounce, and we sell off again? I think the markets, if we do get the Santa Claus rally, I think the markets may be in a little bit of a hurting come the first quarter. But again, that's way away. Let's take a look at this later. Now, we also have our NASI, our weekly New York Stock Exchange Summation Index, and which produced a sell signal, as you can see here. I mentioned this like 7-8 weeks ago. Now we're back into this area, and it's flatlined. So this week may have us put in a buy signal for next week in the NASDAQ. So that's something also to keep in mind. Now, let's take a look at the dollar. The dollar daily chart. We're into resistance. Remember I said maybe we might be looking to get the spike up, and we sure did, right? We got that spike, and now we're back down again. So this is something here I'm going to be really paying attention to. The dollar, we want the dollar to roll back down again and back into this area, this ascending triangle consolidation area. And if it can roll back below that, then we're going to have a continuation of a push up in equities. The weekly chart, as you can see here, big move up, uptrending channel, wedge, if you will, and we're into resistance now. So this area here, looking to take out Friday's low, would send stocks higher again. And the VIX, very unusual, but as you can see here, we did get a risk on where VIX would actually roll back over again. So it did behave well, but I thought the VIX would be somewhere in the 20s, which I would have liked to see, but it has not broken this 1940, 1920 area, this slanted area. So now we're back down below, telling us that risk sentiment is back on again. Okay, so now let's move on into the charts, and I want to show you, I want to show you copper. Copper, again, holding this area here. So that's a good sign that copper didn't sell off as much on Friday and held this area of consolidation. So now I'd like to see copper break above the 20, and then, of course, has some work to do here on the 50 and the 200-day moving average. All right, now let's take a look at our 10-minute chart just to show you where we were. Right around here, 11:30, our congressional leaders started speaking positive about the fiscal cliff will be resolved by Christmas time, and sure enough, we popped back up here and then consolidated into the close. But as you can see, we had a consolidation, 2-day sell-off, consolidation. So, and this is coming off of another 2-day sell-off. So really, as you can see, we sold off 2 days, consolidated 3, sold off 2. So it's really not really great type of trading here, especially when you're consolidating more than you're trending. The overall trend obviously is down. Now let's take a look at our weekly chart. As you can see here, we are in this confluence area of support, and to me, I suggest coming into the seasonal tendencies, the seasonal time of year, which is now, I do see some sort of a bounce, at least a bounce going into the end of the year. Now, that obviously could change if something really nasty comes out of Europe and or our fiscal cliff issue. So here's a weekly chart right here, guys, and this is where I'm looking for some sort of a bounce. I showed this early last week. And our quick and clean ATR S&P, we did get back in this area here a little bit, but I would have liked to see a little bit push up in here. So let's see if this actually produced some sort of a buy signal here. As you can see, nice reversal candle, close outside. We had an outside day Friday from Thursday. That's also a positive sign. 61.8% retracement. We pierced it and broke back above it, and I said, watch, this could be producing a bounce. Sure enough, it did, and we did get our little reversal candle. Nice reversal candle, too, if you will. Spiders, SPY, want to show you that nice accumulation. Look at that. Buyers did step in, and as you can see here, 61.8% usually is a good buy-in for the markets. That's why I put this. I put the Fibonacci retracements on here, and look at what happened. We shot past below the Bollinger Band, closed inside, again producing a buy signal to the market. And here's the only thing that really scares me is the transportation sector. Now, seasonal strength is upon us as well on the transports. I really want to see these transports start to pick up steam here. Now, if the transports, for whatever reason, start to sell off, I think you might have a problem here in equities. Now, again, it could be ignored, but I don't see how you could really ignore a special this time of year when the truckers really get going and they start really catching a bid here. And if transports don't move, there's going to be a big warning sign to the markets. So just keep that in mind. All right, Dow Jones, ETF, 60. Oh, we're actually at the almost 76% retracement here. So that actually produced a little bit of a bounce. Again, an outside day from the previous day. We did break below the Bollinger Band, closed inside it, and that also produced a buy signal. Excuse me. And as you can see here, we're way oversold. So let's see what happens. Maybe we can get some sort of a nice continuation follow through from Friday. We could build on that and then get some sort of a rally going into the end of the year. IWM's nice big bars you can see here. Clear reversal, broke down below, rallied back up. Rallied not only into the close, but after hours. So that's a good sign that we bounced today. And we're up small right now. I think we're up about 3-4 handles in the pre-market. And Apple, let's take a look at Apple. As you can see here, we did break below that 532 weeks ago. We sold off to the 522. And not only did we sell to the 522, but we sold off down to 504. 504 was the low. And we broke back up above it to close above it. Nice big reversal day. Same thing, Bollinger Band broke out, closed back in. A good positive, nice accumulation here. So Apple could produce a real nice bounce easily to the 600. And that'll get you right up in this area here, in this confluence area of resistance, which I think would have a little bit of trouble if it did rally back up here like that. So, again, a good sign. We want to see Apple rallying if you're a bull. Apple is heavily weighted, as you know, in the S&P and in the Qs. And as you can see here, Qs double top. Apple's been selling off, so has the Qs, and caught this long-term trend line here. And this is dating back from July. So this is something that really needs to hold. And if Apple bounces, obviously the Qs is going to bounce. And this is a weekly chart, guys, of the Qs. And daily, way below the 76% retracement, well overdue for a bounce. Going to have to hold this, otherwise we're going to retest that June low of 60.05. So really pretty nasty sell-off here. We'll see what happens, but we're coming into a week where we should really start picking up momentum to the upside, and we should get that follow-through going into next week and the weeks ahead. Now, another thing, too, Lightning week, right? Thursday we're off, half a day on Friday. Usually a lot of big market participants leave, and what that does, usually markets drift sideways to up. So the advantage is going to be really playing stocks to the upside this week and the coming weeks as well. Last sector, SMH, was technology. The tech sector, the semis, excuse me. What I want you to look at is here. This is where we're going to need to stay in place. Now, again, seasonal strength is upon us in the technology sector as well. So the semiconductor space will do well. And big cap tech will do well as well. So please keep that in mind. Watch this here. We can get above Friday's high, then I think we have some momentum at least to get back into this area here. Okay, right, guys. Have a great day, and we'll talk to you tomorrow. Take care.